What's going on, guys? So we're going to be doing a recap here on this whole entire market correction and the trades that I've been taking within the midst of the market correction. Obviously, there's been some really nice snapback rallies. There's been some really nice lower highs to take advantage of on the loss of this gap right here, as well as like around this swing low, which would have been the election gap fill here on the S&P. So this low right here was very important, January 13th's low. And then we obviously had some other little areas in mind as far as a target goes for the S&P and potentially its bottom. Obviously, this is all a product of time just as much as it is a product of price moving forward here. The timing around everything is very important, right? We obviously have a window where the market is at a very high probable chance of selling, right? Given the fact of the distribution schematic here that we have on the daily chart, as well as a lot of these Mag 7 names that have been looking very distributive. Obviously, NVIDIA being the one that I've been talking about the most, but other ones as well as like Tesla, a huge breakout failure from the highs, pulling into the gaps. This is nothing new, guys. It's all very, very, very similar here in regards to market pullbacks and in the rebalancing essentially of price pulling into those gaps to collect those orders and to collect the imbalanced areas on the chart to be able to sustain a healthy counter trend rally back to the upside. So first things first, we're going to start off with QQQ and talk about just a couple trades within QQQ that I've had. One of those being the overnight swing on the short side exposure here. So the reasoning behind this and the reasoning behind the weak close short that I took the previous day there was two reasons. One being that if you guys go to the daily chart and you take a look at this, this was our previous, this was a swing high all the way back in July that actually led to that whole entire correction into the August 5th low. The August 5th low being a gap fill down here, which resulted in a change of hands for then a counter trend rally back to the upside. This was also around that previous support of January 13th, right? So whenever we're going into smaller time frames now and we're seeing everything happening on the smaller time frames, we could see how this was essentially a very, very large sell period on the previous day's afternoon, and then it kind of bottomed out on a failure to break, or actually a failure to break and base beneath the election gap right over here on the NASDAQ. That's actually when we filled the election gap was over here March 4th, right? Now, whenever you're filling a gap and you're putting in a reversal looking candle and a lot of volume, there's really not much to say in terms of this being a reversal bar just yet. So that's first things first. Second off, the thing that I would really like to talk about here would be this was simply just a discounted pullback off of a very weak, really, really weak looking bid here as we moved our way forward, right? We had a lot of volume actually pouring in here towards these lows, but what that was volume kind of drying up into basically just a lower high, that lower high being right off of the Monday's swing high to the Tuesday action swing low, right? So it's just your weekly price move here. And what this did was it popped right back up into the 618 as well as 503.56. And if you guys go on the 5-minute chart and you take a look at where this sell actually occurred from, it was actually leading right into Trump talking. So this was all basically just one big event where they pushed price higher into an area where obviously the short side trade for a lower high on the hourly and on the daily was very easy to look for, and as well as this also just being a previous breakdown level, right? This is a daily breakdown level when we're looking at this from the January 13th low into the support that tried to hold February 27th through the 28th that eventually cracked on this daily candle here through March 3rd and then eventually got the breakdown and the retest leading into that Trump talk, right? So that was a very, very easy event that obviously drives liquidity from the counterparty perspective for us to be able to take advantage of the intraday volatility just right off the golden pocket. Very simple. And obviously there was other things tied into that as well, but can't really cover everything because I have other things to cover in terms of other trades. Netflix, I try to give you guys a hint over here on Netflix for this day. Basically what this all was, guys, was simply just a path of least resistance here to the downside. So when we go take a look at the Netflix chart, we can see how right over here, I kind of gave you guys a easy little pre-market prep here. Um, on we don't have a full-on out wave of distribution happening on the hourly chart, which I'll go over. And Netflix is a really good short. I don't know if I put this over here in the no, I did not do anything in the pre-market prep. It was just in the other channel. But basically what we're looking for here, guys, was just simply overextension of price away from a very large earnings gap that obviously, like I said, in a window where things are very likely to sell, you're going to see very large gaps left behind, and you're going to see price pull to those gaps because from the top end of the chart and from all of these areas on the chart that are higher low potentials respective to the earnings gap, there's not a lot of volume and there's not a lot of strength off of these areas, right? I mean, you guys got to think this is 1, 2, 3, 4, 5, 6, 7 days of coiled action here happening just right above that earnings candle low, right, which is right into the bull gap, but just a failure of displacing above the earnings candle high and then eventually reclaiming that and going for this swing high all the way up here, right? So when we're looking at this weekly chart, we can really start to conclude that this thing's been on a really crazy run, right? And we still have very large levels to be retested. And then we obviously still have a very large gap to fill all the way down into 870, right? So when we're looking at this and we go into the hourly, and we look at essentially the failures happening off of these highs, followed by the gap down, right? This is a less liquid tech name. You're basically just looking at what the bid is looking like off of these areas, right? So I knew that there was a knife. There was no subsequent big time buyer that was of any sort of size, right? We got a very weak looking orb followed by a retracement into that orb, intraday lower highs, and then eventually a crack and break beneath with no buyer in sight anywhere, and then eventually a break and base beneath the earnings candle low here, right? So this is a path of least resistance, just like I was talking about, where you have several days on end trading within this candle, right? And then you eventually get your breakout. That breakout is then retested and continues for another 3 trading sessions, followed by a breakdown, lower highs on top of that earnings candle, several tests of this earnings candle low support range, right? As we have over here, a little bit above that, as well as over here into the 950s and right here as well, right? So that gap down, followed by no big buyer that's obviously claiming this is territory to be defended and do something like that. It's more and less just going to knife right straight through and start capitulating more towards the bottom of the gap. This is one of those names that have been failing to sell, but it hasn't remained too strong, right? This is not a name that has remained very strong. It's a less liquid name, right? So it takes maybe a little bit more time to distribute. Right, and sometimes you have the less liquid names being an early distribution or a late distribution. This one being a little bit more in the late side of distribution, right? Um, so that was a fantastic trade over there. I actually left way too much on the table. What I did was I bought the lower highs and I started sizing into April puts, but I sized in a little too heavy and then I just scaled all of them out on this breakdown down here. I don't know why. It was not the smartest, really. I was just too heavy in the trade, and I was like, all right, whatever. Now we'll go over into TSM. This was another nice little win that I caught over here today as a day trade, as well as the Google long. We'll talk about the QQQ hourly schematic as well as these schematics over here in TSM. Essentially what this was here, guys, was I was looking at this yesterday on the weak volume pop, essentially into the bottom of this gap right over here, which is also kind of where we were trying to create a support from. And then we got the breakdown candle. What the breakdown candle was this day right here on this red candle that's very large, February 27th, right? So when you're going into your hourly chart, you can kind of see how this is simply just like your recent impulse high, recent impulse low, it's into a discounted range, it's back testing the bottom of that gap that has now been lost and capitulated through on. And then we still have targets that remain here for the downside. Down all the way into 167 at this unfilled gap. And you also have a very large, widely based consolidation range that's sitting around here as well, right? And we never got a true strong pop off of that area. Another thing that I would like to talk about is how this was actually popping its way higher on very weak looking price action. As you guys can see, this had a pretty weak close followed by a gap up and then absolutely no trading action happening into the bottom of that gap, telling me that there's not enough fuel here for the upside. So we got the gap down. I didn't want to short the gap down. And then basically what I did here was I eventually found some weakness within equilibrium of the gap. I sized in some puts sub 180, had a risk above 181.50 for the April expiration. Easy, nice base hit win. Scaled out most into the AVGO earnings just because I don't really want to have too much exposure to the earnings, with AVGO being in a state where you're filling the entirety of this bull gap into the report as well as a major back test of this previous level, right? So that obviously aged well, and we swung some SPY calls for the NFP reversal, which I'll talk about here in just a moment. But AVGO had a very fantastic markup, right? And obviously that could give us maybe another opportunity to short this one once again. So now we'll go over into QQQ and talk about this one real quick, as well as the Google longs. So with QQQ, we always want to look for mature distributions happening. And what I mean by that would be you always want to see like some sort of LPSY or MSAL, major sign of weakness / LPSY, just a very, very, very large sign of no buyer commitment at the bottoms of a markdown phase for it to continue further on. And what we had here was truly no large, big time seller essentially off of the gap down, right? There wasn't anything that was too crazy in terms of this gapping down. What this more and less was equal highs sitting up here. And what I like to look for is on like the hourly schematic, what I typically like to see would be like you have some range build up and then it breaks out, people get bulled up and then it distributes again and then it breaks out one more time, people get bulled up and it's like a 3 higher high distribution happening on the hourly chart, then eventually a failure and then a smaller time frame LPSY, and then we could obviously take it lower once again. So I was saying to everyone, you know, don't short the hole here. This could be just simply a lower high within the overnight gap, just as we talked about with TSM. You never want to open puts on a gap down of -2% for the NASDAQ, right? So that never happened. And then obviously we got the reversion here back to the upside within the midst of the gap. They never closed the entirety of the gap though. And essentially what they did was they sold it off on really low volume into this low all the way down here. And then they started placing dark pool sells at the top of the gap, and they initially built the order with about 13 different prints. They built that up into 37 prints for the closure. We have data tomorrow, NFP being that data set. So this is a fantastic opportunity in my opinion here for potentially an NFP reversal that will eventually take out this high, collect more orders that remain within the midst of this unfilled gap here from 502 all the way down into the low 490s, right? So about a $10 gap here on the Nasdaq. So yeah, large dark pool asks sitting up here. And then obviously that would result in those hitting the exchange, and then eventually we can maybe get like one final LPSY, and then that will lead to the last wave of a markdown here, leading into like around the summertime in Q2. As far as everything else goes, it's been pretty simple. Google, I took right off of the open on this flag on the 5, relative strength right off the open, and then a lot of consolidation on lower volume. And then basically what we did here, guys, was we popped. If you guys go to the daily chart, what this was it was simply just a pop all the way up into just around that progress range at 175, and 175 is a very large area that needs to be absorbed on Google for a reversion trade to make sense, right? So this is just a quick little day trade here, 172 risk. Put the trailing above 173 and above this resistance once we got above that. And then we just got really nice momentum on this second 15-minute candle, or third 15-minute candle from the entry here, for a continuation up into this high and near that 175 psych. So you always want to be scaling into strength, especially in a weak market. Something we should all know and take a very clear note of. GS was a really fantastic short side swing, 140 something percent on this trade. Absolutely insane. Really not much more to talk about over here with GS, or I'm sorry, I didn't even mention GS really to you guys. GS was another short side focus of mine here for the financials. I was more and less mentioning Schwab to you guys. Schwab was a fantastic trade here to the downside. Four higher high, climactic top, and then just leading us into the redistribution zone, the previous distribution zone from the banking crisis that happened in 2023. And this is your fourth higher high, right? And as you guys can see, when you go into smaller time frames, it was actually your fifth higher high that was distributed. And you could see throughout the volume patterns here where there was a very large selling action happening throughout most of these areas. And then eventually, like I said, right, we got into our final higher high, and there was a ton of volume here on the daily chart relative to the rest of the range on these 2 days right here, February 11th and February 12th. And that was on the failure of the previous highs into new highs. It was more and less just a sweep, right? And we had very large volume followed by a lot of consolidation and then eventually lower highs, a break of the lower extremes on smaller time frames. And I did post the hourly schematic in terms of preliminary supply. And then obviously you get your buy climax, your UT, your UTAD all the way up here, your LPSY, your sign of weakness all the way down here. And these are all just simply back tests of the lower extremes on the hourly chart that led us into a full on out correction from $80 down into 74. So $6 move on the underlying. On the short side trade, I caught about a it was about a 7% move on the underlying, 7.5% actually. So that was a fantastic trade there. Still doesn't look good, right? So a lot of these names in the market don't really look good, and the signs will be there whenever they do look good. You just have to remember that a lot of these distributions, they play out in a way where everyone thinks they time the bottom, and then they get obviously gap down on. That's another thing as a reason as to why I was short, was you had these like 200 MA bounces, and you had QQQ's 200 SMA bounce, and then eventually what happens is they start accumulating more and find those buyer stop rates to put in their hands as they move these things lower beneath these previous lows, right? So this has been very clean price action, very volatile price action. It's a little bit difficult, but as long as you're remaining really patient, you can catch moves from the bottom ends for the long side and the reversion back higher, as well as the reshort opportunities, right? There's always going to be rips on an intraday basis here within a market correction, and there's always going to be those rips are always going to be available to reshort, right? So that was all that I have as of lately. Nike, I'm trading this one with kind of in confluence to my SPY thesis as of right now. What this is doing is it's filling the gap, and it's trying to break structure here on the daily chart above these previous lower highs and take those and claim those now as higher lows, right? So if this thing can get above $79, which is the top of the gap, as well as this previous lower high, this would be a fantastic swing trade to think about heading for that 85 gap, right? Eventually. I'm not saying that's going to happen as of right now, but I have tight risk on this trade. It's not anything too bad. And I sized in today off of this candle as well as the dips. So yeah, gap fill yesterday. Really nice strong move today, lower volume sell, and then a decent recovery into the close. What I'm looking for tomorrow would just be, like I said, 79 being taken, which would be about from here, roughly 1.5% on the underlying. And if 78 can be taken, that could be potentially my trailing stop here. So this is April expiration swing trade on Nike. And this has been an accumulation I've been talking about for a while. So Yeah, with that being said, that would be everything I have to say. There was other trades that I've taken, but I don't really want to cover scalps and smaller perspective trading. I'd rather cover the bigger trades that I've hit over these last couple weeks. And yeah, and I've also explained all the other big ones in other previous videos. So if you haven't seen those explanations, feel free to go back in my channel and look for those.